Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, November 14th, Tuesday, CPI day. And oh boy, today we got pretty decent news. We got core inflation rate going lower, 0.2% instead of the 0.3%, and the same for year over year, a little bit lower, 4% instead of the 4.1%. And in terms of headline inflation, we got 0 on the rate month over month instead of the 0.1% expected. And year over year, we are coming from 3.7 to 3.2, expected 3.3. So every single one of these readings, it's pretty good news for the current state of the market. But as always, we have to go deeper and see what are the details. And the details are decent, good, but there are still things that we have to be watching. And the first thing is that the index for shelter continued to rise in October, offsetting a decline in the gasoline index. And this is what happens. Some things like energy are pretty negative. Everything is in the negative for October. But if we go to the all items less food and energy, that's the core CPI, and we see shelter and services, we can see the 0.3 in shelter, 0.8 in transportation services, and 0.3 in medical care. Overall, shelters services, it's ticking lower from the 3.6, but still pretty high number. Another thing that is coming pretty decent is used car and trucks, 0.8, and going deeper into the services, we can see all items less food and energy. We can see that the shelter index was the largest factor in the monthly increase of all items less food and energy. That's pretty damn high. And that includes, for example, for all items less food and energy rose 4% over the past 12 months, with shelter increasing 6.7%. Motor vehicle insurances, 19%. So there are things that are still pretty damn high, but overall, I think this is a good news for the market and for investors and for the economy. Inflation is continuing showing signs of cooling down. But watch out. In the short term, we might be heading lower because right now the expectations for the market in terms of interest rates, it's start cutting rates as soon as May. We are cutting rates from 525 to 500, so 25 basis points from there, and we go step by step, every single, not one, but 25 plus 25 plus 25 plus 25. So basically, to finish 2024, 100% basis points, so 1% lower to reach 425, 450. This is market's expectations. And they think that if we don't start cutting rates as soon as May, we may be heading into a recession, deeper recession than expected. So that's where markets are expecting support from the Fed, starting cutting rates as soon as 5 months into 2024. Now let's go to the charts to see the technical side of things, because there's always a technical side that we have to really be aware. The first thing I would like to mention without going into today's CPI move, it's this setup going into pre-market. So yesterday I took this bounce of the 4-hour and 1-hour fair value gap on the move from Friday. So basically yesterday, Tuesday, we got that V reversal, nice dip of also last week high, last week low, and I started yesterday watching this buy side liquidity up here that we tapped. We tapped and we started just closing basically at the middle of the range. During the overnight, we were slowly but surely grinding higher. And my first target was obviously the next buy side liquidity up here. That is last week high. And we almost tapped that 15,600 into pre-market. That was pre-market high until CPI came out. We bounced off pre-market low almost to the tick. I didn't take this trade, but this is an unbelievable entry. Pre-market low, pushing lower into CPI and then skyrocketing almost 120 points. So that buy side liquidity got swept, and we are now pushing into another buy side liquidity. And this one is going, you have to really look to the left. Into the left, buy side liquidity, we have to go to NQ continuous chart to really see this liquidity. Obviously, this level has had a lot of stops from shorts down here, 15,700. But look at this. We have a 4-hour fair value gap that we were going to go through. So basically, if we come again here, we push this 4-hour fair value gap, and now we are finding us up here. This is the most dangerous spot, I think, this year. As you can see, I have 3 white lines. This is liquidity. There's a lot of shorts up here, placing stops. And then we have the big kahuna 16,062 liquidity year to date. And I think it's all-time highest liquidity. So I think the markets right now, we are heading towards that. We are 100, maybe 50 points ahead of that. But I think market is gonna run these stops. So watch my words, mark my words. Let's go to the 15-minute chart to see the details. This is the 4-hour chart, the 4-hour fair value gap that I was watching. This is a bearish fair value gap. We are still in the 4-hour push, so we have to go to lower time frames. And on the 15-minute chart, there's nothing. We have no gap here. There's clean price action, cleaning all imbalances. So we have nothing. The only thing that is preventing us to really go through here, it's all these people that is starting to go short up here from this. But I really think we are going to hunt these stops. We are slowly grinding higher. As you can see, I have some lower time frame fair value gaps that I'm watching. So this one is no longer applicable. This one, it's the next one. We have this liquidity here, and we have this one that we already did. And look at this. We didn't push and retrace. So that one, 15,903, should have been 905. 2 points. Call me crazy, but these 2 points are big, are important, because the next one we have, it's 917. And there will be a lot of short stops up here. So buy side liquidity, we could basically explode to the upside and retrace. So this is what I'm watching. I'm not going to trade this. This is a very pretty damn dangerous spot. We have this fair value gap, bearish one that most probably we are going to run into this. Then we have the retest of this liquidity, and then if we go through this spot, most probably we are going to retest 905 and 917. But watch carefully. This is bearish structure already, and I think what is going to happen is that we are going to grab this liquidity and then rug pull into the afternoon. Be really careful. Be really careful, because this is not your spot, your location to go long. There's a lot of risk up here, because if they swipe liquidity up here, they take everyone's stop, since remember, we are going backwards towards, that is July this year. And then we have this one, 16,066. So, I mean, there's a lot of liquidity. It's true that once we start getting and hunting all this liquidity, we should go for everyone's stop. But I think we are not going to go directly to 16,062. We could, and we could just grind higher until, let me just mark this because I'm not going. So I'm going to grab this, just adjust this, because this might happen. 60,062, remember, this might happen. So in the 1 minute chart, we have, so 917, and then we have, let me check, this is visual, all intervals, sorry about that. So we have only 1 minute. We have now that liquidity up here. I don't think we are going to trap all these people, but we could. Nasdaq is hunting shorts right now. It's squeezing, and it's a beast. Be really careful. This 1 minute fair value gap is holding. The next one is this one. I think that one is 5 minutes. Yeah, that one is 5 minutes. This one is a 5 minute fair value gap bearish, but I think this is not going to hold. We are pushing the 1 minute, and we are hunting all these people, and then we can hunt another people at 905, and then 917, and then 16,000 and beyond. So be really careful, because the structure for the bearish entry, for the manipulation to take all that liquidity into a rug pull, that's a setup. But it's also a setup to squeeze through all of them. So you don't have clear structure up here to go long without huge risk. And that's my recommendation. Look at this. Again, rejection. Fair value gap is holding. But we have also fair value gaps up here, and those are gone. So the only one that is holding is the bullish structure on the day for the 1 hour fair value gap. And I need that to solve. For me, the best approach to trade the rest of the week is to wait for the close and analyze today's price action once the close happens, and then reassess my bias for the rest of the week. I'm not going to go long or go short up here with all this much structure and manipulation that might happen. And that I'm not going to watch other markets, because today there's no correlation, no divergence with anything. Nasdaq is full of green, and this is just manipulation. How much they want to manipulate, how much they want liquidity for the rug pull right now, or wait for higher levels at 16,000, for example. But right now, look at where are we. I've been calling this since we were here. Watch my weekly recap, because I put that in here. 2 weeks ago, I called this. And I called also 16,000, and we are up here. But there's too much risk up here. If we try to go higher and reject with all this liquidity, woof, I mean, this is pretty dangerous. Pretty dangerous. Market is expecting support from the Fed in terms of rate cuts. So they think that the economy will need support. So we are not going to just skyrocket into all-time highs with this midterm risk. So they want to try some shorts, and the big liquidity is up here. So be really careful. Don't be liquidity for market makers. Just manage your risk, wait for today to close, reassess your bias in terms of, okay, we reached these levels and this is clearly a setup downside, things like that. But I don't think trading this into the afternoon, it's manageable. That's my approach. And I think that's all. That's all. My recommendation is just the move is already happened. This was the move, or even this grind higher. But once we reach this liquidity and we tapped almost this is becoming too risky for me. Let's see what happens. Tomorrow I will analyze and I will provide you with an update in all this setup, because I think at some point this liquidity is going to be grabbed and we might see a big downturn. And that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos every single day like this one for market forecast, market updates, and market recaps. I appreciate your time as always. Remember, discipline, patience, and risk management up here. And today, it's key to have risk management. Stay safe, everyone, and see you tomorrow.